let me teach you how to adult, Financial Freedom Edition. How to have financial freedom as an adult. Like I said, adulting's hard enough as it is, so let me help you understand. I promise you don't have to be in your 20s to want to learn this from me. There's lots of people out there that have never learned it into their 30s, 40s, 50s, and that's okay. It's never too late to learn and do better. So if you want to learn how to have financial freedom, how to eventually build wealth, then stick around with me and I'm going to teach you all the things. So first, we're going to talk about just the foundation of money management and the things that you need to know quickly just to understand how to better manage your money. Know how to budget. The most basic, simple budget. It's basically where your money has to go out, what money is coming in, and a percentage of your bills that you have to allocate to certain things. Because there's certain what we call fixed expenses and variable expenses. Fixed expenses are things like car payment, rent. They don't change. They're stagnant month to month. You can know what to expect for each month and what those will be. And variable expenses are the ones that you're not 100% sure how much it's going to be each month, but you have to make an allocation in your budget for an approximate amount. And those are like utility bills. That's variable. It changes month to month. Grocery bill. That changes month to month. So there's things like that that you just need to understand a percent rule when budgeting so you can allocate enough funds to each category in your fixed expenses and your variable expenses. Next, you may not have this right off, but you need to be working towards an emergency fund. Emergency funds are so important because you have to have money in savings. There's gonna be things in life that come up. So I would say work towards $1,000 in an emergency fund if you're just starting out with saving. But I say target $1,000. Once you have $1,000 saved, that is a cushion for smaller problems happen, but it's not going to cover everything, and it's really not enough if you lost your job and had to go months without a paycheck to pay all of your bills. So the goal really is to have 6 months of an emergency fund to cover all of your bills. So you should understand what your monthly expenses are for all your fixed and variable expenses, how much it is per month, multiply that by 6 so that if something happened, you lost your job, you became ill and couldn't work, whatever it is, then you were able to have 6 months of a cushion to be able to use your emergency savings to get by until you can work again. So that is very important and a rule you should live by your entire life. As your expenses go up, your savings, your emergency savings should go up as well, because it always needs to be able to cover that 6 months of what your expenses are at any given point in time. The next thing is understanding credit and debt management. So credit scores are a big one that a lot of people are not taught, and they're just winging it and not really understanding what it means and what all of the things that impact your credit score. So I'm going to quickly go over that. I have other videos on it that go in more detail, but just to give you the highlights, credit scores it's really important to know what impacts your credit score. Do not, I think a lot of people make the mistake of opening up a bunch of credit cards, and if you go shopping at a store, they'll say at checkout, save 20% if you open a card with us today. So many people are just so uneducated on this and don't understand the impact that it's making on them. So the more credit cards you have open affects your credit in a negative way. The more credit cards in a short period of time that you open up, that affects your credit in a negative way. One of the biggest impacts on your credit is, of course, payment history. Are you paying on time? But also the percent of your credit limit on each credit card that you're using each month. So the ideal target range is like 25 to 30%, no more. So if you're using 50% of your credit limit each month, it doesn't matter if you're paying it off, that is going to negatively impact your credit score. So all of these things are really important to know. Or other debt that you may have outstanding. A lot of people are going to have a car loan. So managing those bills that you have or any other debt, student loan debt, is really important because that can get out of hand rather quickly. And also you do not want to end up paying a ton in interest if you can avoid it. So there's several methods you can use to paying off your debt, and one of them is the avalanche method, which is paying off the highest percentage card first. So if you have 3 credit cards, one at 25, one at 15, and one at 10% interest, you want to start with the 25% interest, then pay that off completely, then move down to the 15, then the 10. You always want to pay the minimum each and every month. You always have to pay that, but you would pay the extra towards the higher percent card for the avalanche method. Debt snowball method would be get the smallest amount of debt paid off first, then go to the next biggest, then the next biggest, then the next biggest. So that one is looking at, okay, I've got this one credit card that only has $200 on it. I've got another one with $10,000. So with the snowball method, you would pay off that $200 card off first, just so the thought or the task of completing a portion of it is a good feeling to make you move forward with continuing your debt payoff. Mathematically though, paying off the avalanche method by percents is going to be the least amount of money in the end that you're paying in interest. The next thing you need to know is in your savings and your wealth building, you need to be thinking about your future. I don't care if you're 19 or 59. You need to be thinking about what your future entails. You need to be thinking about retirement. You need to be thinking about future savings. And that is important to understand what that means. Understanding compounding interest and why that is so important to your savings goals. Your checking can sit in a checking account, but your savings should be in a high yield savings, as high yield as there is available. So I use Ally Bank. I actually have the link in my bio if you want to check it out. But it is my absolute favorite as far as like ease of use, good bank to work with, and it's all online and you can access your money at any time. The higher the yield, the more money you're making each month on money that's just sitting there anyway. So you want to be making money. That's how people get wealthy. They're always making money on their money. That's what you need to start thinking about. Understanding the difference of your retirement funds, whether it be a traditional 401k or a Roth IRA, what the differences are and what those mean to you. They're taxed differently, so it depends on which bracket you're in, whether you want to be in the traditional or the Roth. And you may want to be in different ones at different points in your career because it's based off your income and where you think you'll be at retirement when you're actually using that money. It is so important to have knowledge so that you can make your own decisions, understand why you're making those decisions, and set yourself up for success into the future. Think long-term, think short-term, think about tomorrow. Don't just think about today. Okay, a lot of people that do not have a lot of money or a lot to show for their past is the ones that only thought about today. And the planners, the people that are going to execute and build wealth and have a stress-free life, have financial freedom, they're the ones that are thinking about tomorrow. Then there's buying a house versus renting, and a lot of times renting is okay. If you are not in the position to own a home, there's lots of other expenses that go along with that. That is okay. Don't feel pressured into buying a home just because it may be the smarter financial decision for most, because it may not be the smartest financial decision for you. I'm a big advocate of you should be able to pay 20% down payment on a home. Otherwise, you really can't afford it. Then you're going to be paying PMI if you don't have the 20% down, which to me is just throwing away money. It's more money you're going to have to spend. So until you have 20% down to afford a home and you can afford all the expenses that come along with it, like homeowner's insurance, keeping up the yard, keeping up the home, if your HVAC goes out, can you afford that? All of these things are things you need to think about and understand fully. Interest rates, where are we at right now in the market and the economy? What are interest rates looking like? What would this look like to you? What is your credit score right now and how that impacts what rate you're going to be able to get? Because not everybody gets the same interest rate. It's based off of your own financial situation. These are all things that are very important. And one thing I hear from most people is they wish their parents would have taught this. They wish the schools would have taught XYZ. And I don't blame them for feeling that way, because that's where you need to change it for your children and your children's future. Make sure you're learning this, not only for yourself, but for them, so that you can teach them how to be financially responsible, how to have financial freedom, and that you can have that for your family so that they can see what that looks like. And that is one big reason I am so passionate about it, is because I love educating people about finance, love teaching people about money. I love getting people excited about building wealth. And that is my why for what I do. And so I hope that I can inspire some of you to want to build wealth and join along with me as I talk about wealth and help you build it every single day. If you have any questions, always ask me in the comments. I try to respond to everybody, and I really appreciate everyone that likes, comments, subscribes, watch my other videos as they come out. I'm going to be going into more detail on how to adult and how to do all of these things in more detail. More about 401ks, more about your credit and how you can improve it, more about home ownership and what you can afford and what you can do to prepare for that, your future and insurance and managing your budget, all of these things. I'm going to go into a lot more detail than I did today. So follow along and learn with me, and let's make some money together.